Good morning, everyone. Welcome to the morning brief. Today is Friday, July 31st, 2020, and we are coming off of some huge earning beats last night in technology. All four of the big horsemen delivered, three of which are up, 5+% this morning. And Google's the only one that's still kind of flat from their earnings, but overall couldn't be happier. As far as if you are catching this on the replay, we'd love to have you join us real time. If you want more information, go to ototnow.com and you get a free trial for a week to come out and see what we're all about. For everybody else who's in the room, remember to have your chat and your Q&A windows open. If you're on replay, you will not be able to see those, but you'll hear me talk about things in those different windows, and make sure you have all attendees selected in your chat window. All right, for our mission objectives this morning, we are going to grow our money, protect our money, and live off our money. And today we're predominantly talking about growing our money. We're going to talk about Google and their CEO, which I meant to look up to see how to pronounce his last name. I think it's Pichai, but I don't know. But he was one of the last of the four CEOs this week that we're going to talk about and highlight, but one of the four that went and testified in front of Congress. And secondly, for our academic topic of the day, we're going to talk about share classes. You know, with Google, there's GOOGL and GOOG. Berkshire Hathaway has an A and a B class. We're going to talk about all that. I've been reading about it all morning, and I think I know about that much more than I did before I started. So it's a bit confusing, but I will break down to you what I know. And then this is a topic we'll probably come back and talk about again once I know more. All right, for our flow today, we're going to talk long, short, open, short, long. What that means to you is we're going to talk about the market review around the world, focusing primarily on long-term investments. Then we're going to go down to today's headline review, which there's a lot of earnings headlines out this morning. Today marks the exact halfway point in the earnings season. So if you think of earnings season as 6 weeks long, so the quarter ended at the end of June. You have everybody gets their stuff together for about a week and a half. Then you have 3 full weeks of earning in July, and then the first 3 weeks of August finish out earnings season. So halfway through, and overall earnings, pretty good, right? That's why the market keeps going up despite the economy dropping by a third in the last quarter. All right, so long-term investments we'll talk about are the Google share class, the Under Armour share class, and the Berkshire Hathaway share class. Then within 10 minutes of the open, we're going to get to the look for some day trading opportunities. So far today, everything's in the green. I don't think that's going to hold today, but we'll get to that in a second when we talk about the market. But green right now, we'll look at some short day trading opportunities for about 10 minutes on either side of the open. Then we'll get back to our long-term stuff going into the question and answer. For contingencies, real-time tech support available to you at steve@ototnow.com. And standard disclaimer that this is an educational presentation, so you have to do your own due diligence before acting on anything you hear in the presentation today. All right, let's look at the SPY 1 year in review as we start to take a look at the market. Again, you see the big two uptrends, or the big two channels at the end of the in the past 2 months there, in the most recent 2 months. So pretty steep for a while, then kind of chilled out, and in the past couple of days showing a lot of strength in the market. So what I will say, there's a combination here, and why I made the comment earlier about I don't think the market stays in the green today is just this. We're coming off huge great news. I think that the big four earnings from last night, as well as some of the others out there, that's got some euphoria. However, two problems. The euphoria has gone on for a long time, so the market is due for a red day, and so that's one. And then the second is, like I mentioned yesterday, August and September are traditionally your most challenging months. So going into the election, I woke up this morning, well, I had this feeling last night after earnings came out of, this is good enough. So honestly, when I look at all of 2020 and I look at my own money, I'm happy. And I'm pretty good to put a button in it pretty much for 2020. So I do expect it to be kind of flat from here. I am going to reorient my own portfolio as well as some others today towards safety. So you're going to see a lot of bonds show up. Things that are in the portfolio are going to be very specific, very surgical if I'm going to hold something through. If it's any of the big four, we're going to hold those names because big four being the Apple, Amazon, Google, and Facebook. Going to hold those except for maybe Facebook. I'm pretty happy to let some Facebook go here, not all of it, just to kind of reduce the exposure to it. So that's what we've got, and that's why I said that earlier for the market. So let's look at the past few days here, the 5 days. The dark blue is the actual trading day. So yesterday, kind of a big run up into the earnings. I expected that. However, now that we've had earnings, it's kind of the buy the rumor, sell the news, which is an hour thought process anyway on why the markets do that. But we saw the buy the rumor that the tech firms are going to go higher, and I could see a sell the news, which, yep, they were higher, so what? Now let's reorient our portfolios. So let's look at the earning calendar real quick. Obviously, the big earnings from last night kind of take the day. Earnings this morning, we did have Chevron and a couple other oil names that were very challenged. I think Caterpillar beat, if I remember right, but I don't remember for sure. I'm getting a head nod of agreement that they did. That's good. So we shall see. So really, it's the earnings from yesterday that are taking the market higher today. While we're here, let's go ahead and look at the big names from last night. So what you're seeing, you see SPY on the left, but you see Apple, Amazon, and Facebook. Those are all up at that 5 to 10% range, which is, again, what we look for in day trading. But huge jumps up, right? Yesterday in the after hours, they're kind of staying there. These are some best of breed, hold it until you die kind of names. Not quite till you die, but you want to capture this. And then obviously the news out of Apple is the 4-for-1 stock split. So the left-hand pane up there, middle left, if you will, that's going to bring the stock price down to 100 and change if it holds in the 400 region, which I think it will. So what does that mean to you? Is there a mathematical advantage of a stock split? Absolutely not. It is literally taking a $20 bill, handing somebody, and can I get 4 5s for this? And they, sure, here you go. That's the entirety of the stock split. So if there's 100 million shares outstanding at 409.80, well, there are going to be 400 million shares outstanding at, divide that number by 4, 104 and change, if you will, 102 and change. It won't do math this early. So that's all it is. Now, from a behavioral psychology perspective, there will be somebody out there to the tunes of tens of thousands of these people that will say, oh, good, Apple's now down at 100. I'm going to buy it because it was at 400 before. Gotta love it. More Apple investors, stock goes higher, or whatever. But stock splits, traditionally, this has been studied obviously at the PhD level because it's very easy to do, is good for the stock because it sends the stock higher for absolutely no reason other than some accounting changes. Obviously, a reverse stock split, which is if you follow names like Luckin Coffee, that their stock price keeps going down. Sometimes you will see a 10-for-1 reverse split. Things like that to bring the stock price higher to make it look like stock is actually recovering when it's not. That's all fun and games with math, which we all love. While we're on Apple and their stock split, this is their fifth or sixth. I think it's the fifth. I read it this morning, but I don't remember exactly. Stock split that they've done. It started back in 1986-87 timeframe with a 2-for-1 split. The one that I remember that some of us, yes, love math, me too. That's why we're here. As far as the stock split that I remember is the 7-for-1 split. So I can't remember the exact timing of that, but I know it's been since I've been in business. So 2012, 2014 timeframe probably. But yeah, so stock splits are good. Apple's going to be cheap again in the eyes of all the people, the Robin Hood gang that are like, ooh, look, it went on a 75% sale. Okay. Apple did not raise its dividend, so it's still kind of a little tiny dividend for you, but if you own a lot of shares, good for you, and it adds up. So not too shabby. All right, let's take a look around the world. We're going to bring you down to CNBC, and we'll take a look at the futures, which are all in the green for us. At least they're in the green right now. We shall see with the NASDAQ up over 1%. We'll see if that holds. That's pretty much a few names out there holding it up. All right, let's take a look at Europe. I think it was mixed when I checked it about an hour ago, and it is still mixed, a little favoring towards the green there. Let's look at Asia. It was also mixed with the Nikkei Japan market down kind of big there. So historic USD, so that's the tail wagging the dog. So our GDP dog wagged the tail over there in the Japanese market. I don't know if that headline is absolutely exactly why the Asian market sold off in Japan, but it's what they say on here. Let's check out yesterday's numbers in our own market. Again, VIX sold off down to 24. Pretty smooth sailing, consider we have an election coming up 3 months. Oh, by the way, did everybody hear the Trump when he murmured that we should delay the election? Yeah, that didn't go over well. That got a big negative response out there. And I think that'd be bad for the country. I would say we do not need to delay any elections pretty much ever. That's an opinion. All right. Bonds, let's check that out. 10-year, 0.556, crazy low. Let's check out oil. Back up above 40. We like that. And then into the precious metals. Saw some green, especially silver this morning. So silver's kind of whipping all over the place at almost 5% up after being up huge and then down huge. And again, the all-time high is up around 49, so it's not even close to it. All right, let's go ahead and take a look at the headlines. We have Tim Cook standing there. What's Tim up to? All right, you saw the blowout earnings, 11% revenue increase. That's kind of crazy. But when you think, so not just for now, but when you see the next thing that hits the market is, you guys are pretty seasoned now, or at least if you're listening to me, that's kind of helping you understand these things. When the market gets crushed, that's an opportunity for those that are paying attention. Now, you're not going to be 100% right. Like hitters in baseball don't hit the ball every single time. But when the market sells off hard, there are opportunities hidden within that. And obviously picking up shares of Apple earlier, at a lower price is a big one. And Amazon down at what, 1,600, taking a double in Amazon already. So when you hear me mutter the words this morning, I'm pretty content with 2020, meaning I would take a flat line into the finish line. You don't hear me say that often. I don't think I've said that since I've been in business, to be honest. But the markets run up so much, it's not time to be greedy. There are times to be greedy. March 23rd was one of them. Well, pretty much all of April was one of them too. But, man, not feeling it. So we'll stay best of breed, very focused going into the end of the year. All right, let's see. COVID bill talk stall. Yeah, that's not good. So that's another thing that's weighing on the market today that I think is an issue, because there was some euphoria between the two acts that maybe we would get it resolved this week. You've got Secretary Mnuchin out there calling for we need the employment benefits thing solved now. It's not going to happen today. And really, it doesn't seem like there's a clear path for it happening anytime soon, to be honest. So maybe the rhetoric will increase over the weekend. We shall see. All right, the hopes for the vaccine thesis. Boy, it sure seems that everything's pointing at something happening this year, which again, if you back up a few months, that's all anybody ever wanted was let's have a vaccine in 2020. So much good news, so much money thrown at it. I have to believe in the human over the disease that we will conquer it. That's my take. All right, let's take a look up here. SPACs news. I do not know what Redbird Capital is. I would imagine that that's just another blank check SPAC out there and IPOing something. We'll come back to those. Don't need to talk about them today. Berkshire Hathaway is buying Bank of America hand over fist. I generally like it when I've bought Apple for years and then Warren Buffett moves in. I'm a little bit confused by the Bank of America move because I'm considering moving out of it because it's been kind of left for dead. But when you got Warren Buffett buying it, and it's like, So if you still see it in your portfolio, that's why I'm doubting whether I need to sell it or not. However, I will say when I go through portfolios today to kind of clean out some stuff, the Bank of America is probably going to go, just because I don't think it's best to breed out there. JP Morgan is, and JP Morgan stock has also not been doing well. All right, earnings at the halfway mark. We talked about that earlier. There's some SEC proposals out there, really too in the weeds to talk about. Exxon continuing in the house of pain along with the rest of the shares. So your Exxon, even though it's got a nice juicy dividend, probably exiting that today for the most, if not all of it, just to go to safety in your portfolio. Yeah, 11.8% of Bank of America for Warren Buffett, and he's probably going to get my shares today. I don't know. We'll see. All right, that is enough of that. Let's go over to FinDiz. As far as the stock we're going to talk about this morning is Google stock. This is of the, we talked about the big three that jumped overnight. This is the one that didn't. When you look at GOOG, remember there's two tickers out there. We'll explain that on the next screen. But Google has gone, for a tech stock, it's been a disappointment. The reason I say that is because it's only back to where it was pre-COVID. Everything else has screamed higher. I think as far as these names, I think Google's undervalued. Nobody's getting my shares today. I'm not really a buyer here, not excited to go get more risk on, but certainly if you have Google in your portfolio, you can expect to see it stay there because it has more room to run than the other three big names that released earnings last night. But again, things I like to talk about, no dividend in this one, so you don't get it from some of the older folks that want that dividend or are living off the income. Everything in the right-hand column is showing green, which is nice. And when you back over to the short float, 0.4%, it's like nobody's standing in front of the steamroller called Google on this one. So all that means there's nice healthy move higher in it, I believe, over time. All right, we're going to switch over to Schwab Street Smart Edge to take a look at basically three names. What you're seeing is the left-hand column is the A shares, and then the right-hand column is the B shares. So let's talk about that very briefly. The A shares are your regular, most companies just have your A shares. It's a portion of equity, part ownership of the company, plus the kind of standard, if you will, voting rights in the A share. So we'll talk Google specifically. You're looking at the GOOGL is Alphabet. Remember, that's the parent company, but they kept the right ticker so you could associate it, which is smart on their part because you say Alphabet and most people don't know what that is unless you're a professional investor. But the ones on the left are the A shares. Those have the standard voting rights. The ones on the right have no voting rights. So traditionally, and those are the C shares. What you don't see up here are the Class B shares. So if you're not confused yet, A shares normal. B shares have 10 times the voting rights of the A shares, except for they don't trade actively. And then the C shares have no voting rights, but they do trade actively. So that's what you have going on in Google. Under Armour is the same way, but Under Armour stock got crushed because Kevin Plank was the CEO, the old CEO was in the news for some terrible headlines. And then he gets this idea that he wants to then, at the worst time ever, bad optics, go ahead and come up with these share classes. So many of us in the room held Under Armour at that time. Remember, you got one share of it was basically kind of a 2-for-1 stock split because you held your share of Under Armour and then you got a UAA share, which was actually the A share, which is kind of weird. But that's how that went down. So same arrangement there of the UAA is the A share because they put the extra A on there. UA is the C share and the B shares are not publicly traded. That differs for Berkshire Hathaway. Berkshire Hathaway's A share is their full share. So if you want one, you can buy it for a bargain basement price of $291,362.01. Yeah, you can buy that on the open market today if you want. Or they came out with a B share, which has nothing to do with the ABC structure of the top two companies. This is simply I think it was 1,500 to 1. You could do the math for me, but you don't have to. Whatever it was, basically they split it out and they trade independently. So what you will see is in all of these arrangements, they're almost exact mirrors of each other as far as how they trade. They said there is a slight premium difference to the voting shares versus the other shares, but not much. And what I say is, I mean, you look at Under Armour, you can say, okay, well, I can see a difference between 11.45 and 10.18. But as far as how they move in relation to each other over time, so investment returns are all based on percentages, that part doesn't change, right? That part mirrors each other, basically. So Under Armour did beat this morning. Okay. I know. Yeah, they beat. So they were expected to lose like an incredible amount of money, and they did not lose that incredible amount of money. They lost a little bit less. Same thing happened with Ford. You heard me talk about Ford yesterday. I wanted Ford to get crushed. 20% hit off the stock. Well, they lost less than they were expected to, and all of a sudden everybody's excited about the Ford Bronco. 283,000, I think, pre-orders. Didn't see that coming, but unfortunately, we're not getting that entry into Ford because they beat, kind of like Under Armour beat, and they're up like 6% today. So, all right, that's enough on the share differences in shares. We'll talk about it again afterwards once the market has opened. All right, so let's take a look at some names out there. The first one, let's look at Ford while I was talking about it. This would be a long off of the earnings beat. It is not gapping up too much from 670 up to 693, but they did lose less. And again, everybody's all excited about the Bronco. Ooh, I see a name we talked about yesterday, Pinterest. Let's put that up, P-I-N-S. Probably low volume, I would imagine. But look at the move. I'm sorry, it is not low volume. There's 10 million shares of Pinterest pre-market. What? Let's see. Strong revenue, earnings released. Wow. Pinterest killing it. Beat by 6 cents, and look at that move. You'd think they cured COVID with that move, but they didn't, I don't think. That's kind of crazy. So 27.2% move up from 25 to 35. You can have that one. I would not touch it, but good for them. Golf clap. Moving on. All right, let's take a look at Under Armour. Let's go UAA. We'll look at the Class A shares. 11.45, but barely moving higher, but you can see it was a lot higher earlier. So I guess reality comes back into Under Armour. Pretty much untouchable. I love the company. I love their gear. I love their marketing. We're still in a hangover of Kevin Plank from years ago. Turned out to be kind of a dirt bag, if you will, or at least that's what hit the news cycle. And yeah, they've been marching back higher, but no, can't touch it anymore. All right, let's look at the tabs. There's that Pinterest. I'm still shocked that 9 million shares of Pinterest moved this morning. Wow. All right, Sorrento Therapeutics. That is a name we had talked about earlier. Let's click on that. I think we talked about that yesterday. Excuse me. It was certainly this week sometime. See if they have a headline or if this is just call options. So when you see a headline like that, options indicate, so they're looking, and this software does this. So they look at all the options out there, and if more people are, it's kind of like moving the line in Vegas. If more people are buying up calls, then that's what that's saying. That can actually bid a price up because people think that all of the, if there's enough people, I like to say nobody's as dumb as all of us, right? So if everybody's taking the same side of the bet, it's just like, well, okay, I guess that means the stock should be higher, right? Doesn't really hold in my book, but that's what you will see out there. Not going to touch Sorrento today. There's Apple jumping up. I don't think Apple's moving another 10% higher today. I actually could really see some profit taking, if you will, or trimming. Not really all out selling, but some trimming. All right. Candy Technologies is a short. Let's take a look at KNDI. I'm not familiar. I've heard the name, so I think we've talked about it. And of course, they're not going to give me a headline. But it is gapping down, heart of the window. Okay, look at that move up. Maybe that looks like a hangover. So it went from 4 yesterday, closed at 950 for a smooth double. Doubled again in the aftermarket up to 18 and change. Okay, this is just it doesn't know where it needs to be right now. So you could trade that. I don't see any rhyme or reason whether you would trade that long or short, but it's going to move kind of thing. There are option strategies that you can either a collar or a straddle, depending on what you're trying to do, where you can take advantage of this exact situation where that stock is not going to stay at 866. It's probably going to move a dollar either direction. But you have option strategies that can go into that, which we're not going to cover today. All right, Kodak has been a crowd favorite, right? So it is in play again. It's down 14%. Let's just click on that to see what the chart has. No headlines. It's just the stock trying to find itself. Still pretty high after all that. And again, there's some negative headlines that maybe there was somebody that was leaking information. We shall see. I'm going to put that down as something that we can cycle back to, but not really tradable in my book. I would say it's a short and it's a hangover stock is what I can call that. It's what I call candy. Okay. Let's look at the next tab. We have 5 minutes to the open. All right, Facebook up, Apple up, Charter Communications, low volume there, and then you have Amazon. I don't really like any of these from a tradability. Trade Desk up a little bit, low volume. Tesla up. Tesla trades as a tech stock, so that's just getting pulled up. And then Shopify up again today. All right, let's look at the decliners. Not a lot of volume there. Let's check out the pre-market movers on another screen. Xilinx, if I were to take one of these, it'd be Xilinx on the way down, tech stock. But we'll look for some pre-market movers. Let's see. Low volume on a lot of these. So Eastman Kodak is the highest volume of them all. There's also Precipio, but that's down 25%. So really nothing setting up on the short side. A lot of names on the long side. All right, let's look at the next tab. 3.5 minutes to the open. There's Pinterest screaming higher. I don't think that has more of a move in it. WWE is up a little bit, low volume. All right, Jumia Tech piques my interest. It meets our numbers. Let's pull it up, JMIA. There's your call options again, headline. That's all is its call options, but setting up beautifully. Certainly got some momentum going to go higher, so we'll keep an eye on that. All right, nothing else jumping off the chart at me. Let's look at the last one. Tenable Holdings, TENB, not familiar. Let's pull that up. It's meeting our numbers. All right, gapping up from 32 to 33.88. New share price at 31.95, and it popped from that. Wouldn't touch that. If anything, you'd short it back down to 31.95. So that would be a short. Let me read this again. That looks too good to be true. So it opened at 31.97, or closed there, I'm sorry, 33.80, offering 8 million shares at 32. Kind of crazy. I may take that as my trade. All right, let's go ahead and get our big board set up, see what kind of trades in here. We got Luck and Short. Ouch. Ouch. That hurts. It hurts. Maybe by you shorting it in our Funzy game, it will go long. Is that your game plan? Lose money to make money? Lose nothing to make money? I like it. Okay, we'll set up Luck and Amazon. I kind of like that. I don't think Amazon's got enough numbers there. $20, that's actually kind of a tight stop for such a big name. I'll take Kodak short, KODK. You'll have to type fast. So Kodak short, I will take it at the open with a 50-cent stop. Out at the 8-minute point. Let's QC. Yep. In at the open. All right. So again, shorting Kodak. The theory is here some of the negative headlines associated with based off of the leadership maybe leaking out something kind of new. All right, we just refreshed as we have about 20 seconds into the open. The Dow and the S&P up about 0.25%, and NASDAQ hanging out about 1% higher. So we shall see. Again, I think it sells off throughout the day, mostly due to profit taking. So ding, ding, ding. Here we go. We'll look at Luckin first. All right, opened at 209. That can't even be possible. So it's a short. So 15 cents higher from 209 is 224. We'll back the chart out here. We'll get you your stop in. All right. So there's your trade, sir. And again, I think we're all hoping that that loses. All right, Amazon's in at 2 minutes, so we'll hold off on that. Kodak short, I'm kind of liking what I'm seeing out of the Kodak chart, so we'll zoom in on that. I shorted it at the open for 50-cent stop, and it's already at 2R, so we'll get that drawn in there. I'm getting a red X, I don't really know why. Okay. I took it at the open. It's 25.03. Oh, it backed up to 25.53. Ah, people are smarter than me. I don't even know what he's about to write up there. So my 50-cent stop was not enough to keep me in the trade. Busted out, but look at that trade. That's beautiful. Crud. All right, so X for Kodak there. Let's see what Amazon's doing. So it opened at 32.42, dropped 30 bucks in that first minute there. Now it's backing up a little bit. We shall see. Not much volume in Luckin there. Kind of an exciting first minute, but after that it's settled down. So we shall see. All right, we've got 10 or 5 seconds before the Predators trade and Amazon opens. It is a long with a 20-cent stop, or $20 stop, excuse me. So 32 right in that range. So, and subtract 20 from that's a 32.07. So you can either draw it conceptually there or find it exactly. That's pretty close. We can get in there if we need to. We shall see what it does. So far that trade's a little bit in the red. So far the Luckin trade is in the green, and Kodak still not happy with that. All right, let's look at how Ford opened. See if Ford is getting love at all. When you look at, while we look at that, if you look over at the market's down for about 3 minutes in a row. Dow's barely in the green. S&P's up still a third, and NASDAQ's actually up over 1% now. So kind of a not a market exciting thing. So yeah, I see luck, and I see that down 8.5% there. There's another Brutical article out on Luckin this morning. All right, so Ford is what I wanted to look at. Opened at 690. That's only a 5-cent move down there. Still in the green based off of the earnings. I think it's tough that, they slashed their dividend. It was paying like 7%, so they got rid of it. And what I like to see is they reported a huge cash position, but they're not reinstating their dividend. So why do I like to see that? Because I don't own the individual stock, because I've been telling people it'd be out of that for a long time. But I do own several of their bonds that I bought on the cheap. So what's the difference there? Don't buy the stock if you think the stock's going lower. You should buy the bond if you think, okay, the company's hurting, but it's not going to go out of business. So therefore, that's when you can get the bonds for 90 cents on the dollar, 80 cents on the dollar. And obviously, if you hold them to maturity, if you buy it at 80 cents on the dollar and you hold it to maturity and the company doesn't go bankrupt, that's a 20% gain before you even take the coupon into effect. So say it's a 4.5% coupon, which is kind of like yawn, that's 24.5% gain. So sometimes when you see a stock getting hit, it's nice to switch over to the bond market and see what bonds are going on sale with it. So enough investing philosophy there. All right, let's take a look at Pinterest again. PINS in that left panel. PINS was up 35% pre-market. That's crazy. This would be a fill the gap strategy of something gapped up too far. We don't generally do that, but it opened at 33.50, buck 30 move there. That's probably 2R. I'm not sure you can be close enough to go 3R on that one with your stop, but we shall see. Market's picking up some red again. Amazon's picking up some red. So far it's hanging in there though. Let's look at UAA long. All right, Amazon's out of that trade. So far we have luckin' or bust. And we are in the luckin' trade until minute 6. So another minute and a half or so, we shall see. All right, Under Armour was up pre-market, kind of opened even, and it's barely up now. Again, you can't really touch that name in my opinion. Sorrento Therapeutics, SRNE, let's see what they're doing. Had it written down as a long. Let's see, 60-cent move up there. Back that chart out, because this one's been in play. I just can't remember it. Yeah, need a little bit more. Perfect, thank you. Okay, so there you can see, man, that thing has run up about $2.50, so 33% over the course of a couple days there. So pretty big move higher, and again, I don't know the headline on that. Market continues to sell off. The Dow is basically even now, and S&P 500. Again, profit taking end of the month. You know, this is not uncommon. Even that move down in Amazon looks big. It's really not. It's just kind of focused in there. All right, the move down in Luckin is not notable. 4 cents down. It just looks painful because of how many shares I have. All right, I was going to look at Candy Short, which was a hangover as I put down. So again, it shorted yesterday, KNDI. So that would have backed up. That's an 80-cent move. That's 10%. That would not have worked. I also put KODK, which I know how that story ended, so I don't need to see it. For a long, JMIA. Can't remember the name. This would have been a long, I think it was a bio name, but gosh, 13.6 down to, that's an 80-cent move down there. So that wouldn't work. So when you see a market open like this, this is where if you have any longs, pretty much you're going to be busted out of them. Well, Dow's still hanging out in the green. We shall see. And then TENB, I had this written down as a short. TENB, if I wrote it down right. 33.80 over to 32.90. Click the other tab over here. I'm just going to look and see what that TNB was. It should be hanging out. Oh, had it pulled up. Tenable Holdings. Again, that was the stock price offering at 31, secondary at 31.95. Sure seems like that should find 31.95 then. But we shall see. All right, that's what I've got. Let's look at some other favorites. You know, Blink has been on fire, so we'll take a look at BLNK. Again, 50% move basically in 2 days. So that's profit taking. I would not care about that at all. That's a fill the gap kind of thing. Let's look at one that is not, is Nikola, NKLA. Again, struggling to maintain 30. There's a couple of, you know, it's green on the day, but there's some negativity associated with that name. Let's look at Workhorse, WKHS. Not too big a move. That's all together about a 25-cent move. That's not too bad. Let's look at Shell, SHLL. Not too much move there. Let's look at CCX. This is a SPAC. CCX. down some, and then LCA is the last SPAC I'll look at. LCA getting some love, so 20-cent move there. All right, we closed out somewhere in our luck and trade, so congrats. I see we can't give you a green check mark, so you get a red check mark of justice instead of the red X of shame. So congrats to Luckin, and looks like it's going to try to fall below $2 now. We'll see. All right, let's take a look in the chat about wonder with the Chinese government getting involved. Yeah, it'll probably take to the next quarter, so expect that to flop around. If you have a lot of it, I might reduce your position. If you don't, we shall see. Down another 10%. That's like chump change, right? When you're down this low. We'll see. I don't know. I'll look into it more today. All right, what else? So good job, free month in the room for you, even though your reverse psychology plan did not work. All right, Apple split could impact the Dow since it's price-based, which shows how flawed that calculation is. I want to say the Dow is market cap based, so it should not be. You can call me out on that one if I'm wrong, but my initial thought is it's a market cap base, so you don't have to worry about a share split. Maybe, because otherwise I think I'd have seen that in the news. I am wrong. Well, hey, if I'm wrong, I'm wrong. All right, so price weighted, meaning that the impact, we've got another screen, meaning that the impact of a company's change in share price is determined by how much shares trade for. All right. No, you don't get a free month, Predator. That's absolutely wrong. Wrong. You are wrong, sir. All right. So it's price weighted, not market cap weighted, like I think the other two are. So good catch there. We shall see. The date of the market split, I want to say, is August 24th, 5th. There's a record date prior to that, which means the shares will flip at the actual execution date if you have an option. So you'll start to see two sets of options out there, and this is going to crush your mind. If you have an option for it at the current $400 a share price, you'll see that option remain. It will adjust, but it'll be coded with like a letter behind it. And then the new options that are getting reissued at the $100 a share price will be the ones that don't have that little qualifier. So over time, the ones with the qualifier will edge out. And if you have a LEAP, a long-term option, that's an abbreviation for something, long-term option, then you may have that option in there for a while. So we shall see. Okay. All right, let's look at the green board up here on TD Ameritrade and see what's going. So Apple options, that's what I'm talking about. Some of those go out all the way to 2022. So you're going to see a qualifier pick up on those, but everything will adjust. Facebook, Apple, Amazon, Trade Desk, Nikola, Northwest Bio. All right. Electronic Arts on the way up. That's kind of name's been left for dead by Take-Two and ATVI, which is right there with it. Now all three trading together. Clickstream up a little bit. Netflix even up a little bit. That's probably just being drug higher from the FANG ETFs that are out there. All right, let's look at the red. Blink leading the way. Again, that's just giving back some gains. That's profit taking. Do not even sweat that at all. It's up 50% on big contracts in the past couple of days. Luckin you can sweat, even though it's not down 10% anymore. Screaming higher, only down 6%. Google selling off. That's a surprise to me, to be honest. All right, Chevron whiffed earnings, so that's not a surprise. I'd imagine several of the oil names are up top here. ConocoPhillips there off 1%. Raytheon down, starting to become a buy. But when you look over at the chart, that first 15 minutes, which we're about to close out of, pretty decent size move down, but Dow's in the red now, S&P barely holding on to the green. I think that goes red today. All right, let's go over to we're going to bring it down to the Chrome screen where we'll show you, let's start with the Alphabet, the Googles. So this is what I was reading this morning as far as what's the difference between the share stocks. We'll just put the key takeaways at the top. So to reiterate, because this can be confusing, 2 listed share classes. Remember, the Class B is not listed, and you can't trade in and out of it. That's where they have 10 times the voting rights sort of thing. So you have GOOGL, Class A, that's where you get stuff in the mail to vote. And the GOOG are the ones where you do not have voting rights. So there it does talk about the Class B, not publicly traded. So we can switch over to the 2 sides of. So this has been going on for a while. I think I saw when I was reading earlier in 1926 is when somebody said, hey, let's do this. I don't want to lose control of the company, so let's create share classes, which confuses people. But then we'll have the open trader that can vote, open traders that can't vote, and then we'll just have the real, core of the company as my Class B shares. So let's see what we have here. We'll see if there's some key takeaways to go right to the key takeaways. Maybe there aren't any. Look at the bottom line here. Okay, performed. Yeah, Berkshire Hathaway, for one, has considered to go up as far as both. And then again, a lot of these times, this is kind of old school, but the family members are the ones with the voting power. Ford was one of the original companies to do this. So you saw it pop up in the highlight there, academic research, strong evidence, dual class share structure hinders corporate performance. It certainly did well. There were a lot of things hindering corporate performance in Under Armour. But that's all I have for that. Last one I'll bring up for you is the dual class stock. Again, this is just another page for it. Berkshire Hathaway. There's that 1926 number. The New York Stock Exchange banned dual class structures in 1986. So my bad, they banned it, and then reinstated the practice in the 80s. So I don't know. I think it's overly confusing myself. There's our key takeaways. That second one there, without sacrificing control, was it's basically a capital grab, if you will, which obviously can bring some controversy. All right. So took the easy win. Yes. Take the easy win. I like it. All right. So how's the market doing? Again, Dow's in the red. NASDAQ still up over 1%, but I do expect some profit taking today and going to safety. That's what I'll be doing with my portfolio. So that's all I've got for you today. Thanks for checking in. You guys have a great weekend, and we will catch up with you Monday. Bye.